Before the market opens, you are calm. You know your rules, you know your maximum risk, and you tell yourself no revenge trading, no chasing, no moving the stop, and you feel like you're in complete control. Then the session begins, right? Your first trade loses, and the second trade stops you out by a stupid few single points, and then immediately the market moves in the direction you expected, and then suddenly something changes. The patient trader disappears. In his place is someone who is more aggressive, more impulsive, and more desperate to be right. And you enter again without confirmation. You increase your size and you take a setup you would have rejected 30 minutes earlier. And then what? After the session, the calm version of you returns. You look at your trade and think, man, that doesn't even look like me. It's not even my trading plan. Was that really me? But let me tell you, that was you. Just not the same version of who created the plan. And every trader has two personalities, right? The trader who exists before the pressure and the trader who appears inside of it. Look, your success may depend on which one controls the account, especially under pressure. Psychologists sometimes describe decision making in terms of a cold state versus a hot state. And in a cold state, you are calm. You can think clearly and you understand consequences and you can evaluate risk without urgency. And this is the version of you who writes a trading plan and the version who says, I will stop after two losses. I will only trade my best setup and I will never risk more than this amount. But a hot state is very different. It appears after when emotions arise. Fear, anger, excitement, frustration, greed. And then suddenly the future feels less important than what you want right now. Like the cold trader thinks about the next 100 trades and the hot trader thinks about the next 5 minutes. The cold trader wants consistency and the hot trader wants relief. And those are not the same goal. Imagine you're down $300 for the day and your written rule says to stop trading. And before the session, that rule seemed obvious and you know it. You chose that limit for a reason, right? You wanted to protect your capital. You knew that your judgment becomes worse after several losses. But now the market is moving and you see what looks like another opportunity and the hot trader begins negotiating. Like, oh, the setup is different. I'm still focused. Oh, they might even say one winner can literally recover everything. So they just overtrade and they just put more size than usual. And they say to themselves, I'll stop after this one. And notice what happened. The rule did not disappear. Your relationship with the rule changed. In a calm state, the rule felt like a protection. In an emotional state, it feels like an obstacle. And this is why knowledge alone does not create discipline. You can know exactly what you should do and still do the opposite when your emotional state changes. Your thoughts are influenced by how you feel, right? Look, when you're calm, patient makes sense. And when you're frustrated, patient feels unbearable. And when you're confident, a small position feels responsible. And when you are desperate, the same position feels too slow. And when you're neutral, a missed trade is completely irrelevant. You just wait for the next one. And when you're just taking a loss, that missed trade can feel like an emergency. Look, the market did not necessarily change, your internal state did. But because emotions feel like information, traders often confuse the two. And they believe, oh, this setup looks amazing, but what maybe actually happening is you say to yourself, I need the setup to be amazing. Look, that difference is difficult to notice in real time. Like let's be honest here. And when emotional need becomes the primary driver of shaping your analysis, the trader starts seeing what he needs to see. The hot trader is extremely persuasive. He can justify almost anything. Moving a stop becomes, maybe you just want to give the trade more room, right? And adding to a loser becomes improving the average, quote unquote, average entry, right? And chasing price becomes entering on momentum, as they say. And you know what? Breaking the daily limit becomes taking advantage of an exceptional opportunity. The emotional trader rarely says, I'm about to break my rules. He creates a story that makes the rule break sound intelligent. And this is why emotional trading can feel rational while it is happening. The mistake only becomes obvious later and when the pressure is gone, right? So when the cold trader returns and asks, how did I convince myself that was a good idea? Because the hot trader was not searching for the truth. He was searching for the permission. I mean, look, losses are only the trigger. And they're not only the trigger. And a large win can change you just as quickly. Like, you took a clean trade, it hits your target, like you feel sharp, you feel like you know everything, you feel confident, you're in control. And then the mind starts telling you, you understand the market today. This is your day. Seize the day, size up. You take another trade, then another. Your standards become lower because your confidence becomes higher. Soon, you give up the original profit and sometimes even more. And this is what the winning version of that hot trader, he does not feel desperate. He feels invincible. But the result can be the same. More size, more trades, less discipline. Emotional decision making does not always feel negative, and sometimes it feels like confidence, and this is what makes it dangerous. Most traders create plans for their calm personality, but the calm personality is just not usually the problem. Your trading system must be designed for the person who appears after two losses, after a missed trade, after a large win, after a stop out that immediately reverses, and you need rules strong enough to survive the emotional version of you. And that may be mean using a hard daily loss limit, a maximum number of trades, a mandatory pause after every loss, or reducing size after emotional activation, or shutting the platform down, your computer, once certain conditions are reached. And these rules are not punishment, they are agreement between your cold state and your future hot state. The calm trader is saying, I know you will want to continue. I feel your pain. I know your judgment will feel convincing, but I made this decision before the pressure arrived. And I know that tomorrow will be another day to trade. One practical method is to create a forced pause after an emotionally significant trade, maybe after a large loss, a frustrating stop out, or an unexpected win. Like, do not immediately take another position. Like, set a timer for like 10 minutes, stand up, walk away from the chart, and allow your body to settle down. Then return and ask, like, would I take this trade if the previous trade had never happened? Regardless whether it was a big win or a big loss, right? Would you still take this trade? You see, that question removes some of the emotional context. And if the answer is no, the next trade is probably not about the setup. It is about the previous result. The goal of the pause is to not eliminate emotion completely. It's to prevent emotion from becoming immediate action. Look, before entering a trade, most traders analyze the market, right? But very few analyze themselves. Like, go ask this yourself. Am I calm? Am I trying to recover my money? Am I afraid of missing out? Am I feeling unusually confident? Would I accept another loss without changing my behavior? And you know what? The same setup can be handled very differently depending on your state. A calm trader may manage it correctly, and an emotional trader may move the stop, exit early, or add unnecessary size. And sometimes the best reason to avoid a trade It's not that the market setup is poor, it's that your current state makes proper execution unlikely. Discipline is often described as forcing yourself to do the right thing, right? But in trading, discipline is also recognizing that you are no longer the best person to make the decision. Like there's a strength in saying, in accepting this, like saying yourself, I am too emotionally activated to continue. And you know what? That's not weakness. That's awareness. And you know how trading is. Like the dangerous trader is not the one who feels emotion. Every trader feels emotion. Like you're human. The dangerous trader is the one who believes emotion has not affected him. Awareness creates choice. And without awareness, you simply just react. You're a slave to your own emotions. Look, so here's the conclusion. There's a version of you who understands trading. He knows that losses are normal, he respects risk, and he accepts uncertainty, and he thinks in probabilities. Then there is another version, the one who appears when money, ego, fear, and urgency collide. And that version wants immediate relief. He wants to recover the loss and provide the prediction. Capture the move and end the day green. And you may never completely eliminate that second personality, but you can stop giving it unrestricted access to your account. Build rules before emotion arrives. Create pauses before the next decision. And judge your internal state as carefully as you judge the chart. Because the biggest threat to your trading plan is not always the market. And sometimes it is the person you become when the market refuses to cooperate. And the real discipline begins when the calm version of you learns how to protect the account from the emotional version of you. All right, master your mind, market. This is NQ State of Mind. If you like this video, help me out. Subscribe. All right, we'll see you later. Have a good trading.